I know it's doom and gloom, but a lot of people think that when the dollar index is going to correct, crypto's on a moon. I don't see it like that, and I'm going to explain in this video. So let me explain some of the basics, right? The dollar rate, the dollar index, the whole entire formula of that is based off a lot of factors. A lot of people are doing technical analysis, which, yeah, you can do a little bit of, but not too much, right? Don't go too heavy on it. 24 different countries, big thing to look at. 6 different currencies, also policy within America, and also the rest of Europe to worry about as well in terms of what will determine the strength of it. Now, the big thing is here, one of the biggest things that people see is when the dollar goes down, in that sense, crypto tends to go up. Doesn't always work like that though. People have forgotten that in 2021, the literal bull run that we've just had, the dollar was going up and so were we. Why was that? Well, the S&P and other factors were playing into it, which is where I think it's important. I've just recently done a full in-depth thread about this on my Twitter, so please make sure you check that out. Anyways, right, let's talk about it. So on the screen, we have the dollar, we have the NASDAQ, the S&P, the US 10 yield, the government bonds, and we've got the most important thing ever, Bitcoin, and obviously the dominance, right? So this is what I look at overall in terms of seeing what's happening. The biggest factor we've got is the S&P and the NASDAQ are trending down, the dollar is trending up. I think that is where the element is that we need to worry about. The S&P, the NASDAQ, etc. Not so much the dollar. The dollar weight will not matter too much, and let me try and explain this in more detail, right? When we go on and look at this, it's a monster. I mentioned it just before, what it consists of. Most of the weight is in Europe. Europe has crashed. I will come on to that in more detail in a second as to what's happened. But when we look at the factor of why Bitcoin moons, why Bitcoin dumps, etc. Right now, Bitcoin has held up very well in the S&P 500 drops. That makes me worry though if we do get a further decline. Let me show you. This is the S&P 500 chart. If we are going to go and retest and go into these new lows here, if it might happen, could, and all that kind of words, and I'm not saying it will, but it might. If it does, earnings season is around the corner, we've got a problem. Why? Because I don't think Bitcoin's going to hold up that 20k level, 19k level for much longer. It's been there for a while now. It's been sitting, it's been tested a number of times. This could be the straw that breaks it, right? The camel's back. Now, what's happened in Europe is more to the point. Now, this is where it goes back to why people believe that when it corrects, the dollar rate it corrects, we're going to go up. In matter of fact, what's going to happen is when this bounces finally at some point, that's all it will be. It will just be the Eurozone and all that kind of stuff in terms of the pound, the euro, and all the other pairs consists of that will bounce, right? For obvious reasons. This would then mean this will correct. Doesn't mean that the Bitcoin market and the altcoin market is just going to go on an absolute flurry, which is why I want to kind of make this video. Everyone's looking at this chart now. They never used to, but now they are because they've seen the relationship to it. Now, as I mentioned before, if you look at the previous bull market, where we were going really turbo bullish from roughly November, October time 2020, all the way up to roughly November time, toppage time here, we were going up. No one even talks about that. That is still a monster move. Now, when you think of how the dollar works, right? Basically, 100 is the base average. The average where it starts. Anything above that, the dollar is more valuable. Anything below that, it's not. It's very, very simple, right? So the weight of it is, yes, if this drops, probably because the euro market has picked up a little bit, right? Or something has happened fundamentally with, dollar or America itself, essentially. You could look at all those different factors. You've also got the yen, the Canadian dollar as well to consider, not just euro, but euro's the most telling one, right? Now, everyone's going to get upset because this is a factor. Another factor we've got to look at is investment. In Europe, in the UK, we've just made up something daft. It really is daft, and I'll explain it. Trickle down economy. Basically, I will get richer, lovely, for me to then put it into the market or the economy to help the country. Now, the big problem I've got with this is it's the same sort of kettle of fish here. in terms of interest rates are going up. In the UK, they're going up. So is this chart here in the US, right? For borrowers to have money to then invest, it's not very good. So mortgage rates are going up, loan rates are going up, all that kind of stuff. For you to invest, you're going to get less bang for your buck. So they're not doing it, which is why as well, another factor of why the dollar index is going up, because people are holding more cash. Likewise, recently with my cryptocurrency holdings, I've literally just, very, very recently, just put my USD stables into pound on Binance because I've made money on it, right? I'd rather just do that, right? So it's a very, very interesting point. The last point I want to make is the obvious, right? We talk about trickle-down economy, we talk about interest rates, we talk about base point rate hikes going up, continuously going up, and will continue to go up. This is where the factor is. Why is no one talking about this bit? Where's the money going to come from, right? If people are spending their money on living, feeding themselves, feeding their kids, electricity, hopefully keeping a job, their mortgage is going up and up, their car payments are going up and up, and all kinds of good stuff like that in terms of what you've used to have, where's the money going to go for investing in stocks, in index funds, and most importantly crypto, which is predominantly what this channel is about? I don't see where that's going to come from when I look at it from a zoomed out perspective. We got interest rates through the roof, and yes, some people may be saying, yeah, they will be coming down at some point, obviously, yes, but they will go down at a much slower rate versus what they would go up, because everything has to stop. If we do go into a proper recession, which could last for maybe, I don't know, 6 months to 18 months, 24 months maybe, who knows. Proper recession, by the way, a couple of quarters, that's what I'm talking about. I don't see where we're going to see this giga pump from. I don't see where this bull market's going to come from. And I think it's food for thought that you should try and keep as much capital as you can, because where's the money going to come from? If Europe starts shutting down and we get supply and demand issues in the US market, the S&P, the Nasdaq's going to fall further. Therefore, we're going to see even more lows. My personal belief is, not financial advice of course, we are more tied to these two than we are to this, weight-wise. I think these are the two important ones. That one, this. Simple as that, right? For obvious reasons, the dominance of USD in the crypto markets, if that's going up, you don't want to be, you don't want to be in crypto essentially. But the most important thing is the fact that this and this going up and these going down is just telling us one story. People are not investing. Simple as that. And if we get a liquidity crisis on these two, because money's been belt fed out due to quantitative tightening, and then Bitcoin falls, we're going to see some lows, proper lows. We're going to see some 12k, 10k levels. I'm genuinely serious. That is what will happen if these play and continue to go down. But it's all due to emotion. You're probably triggered watching this video, me telling you that this could happen. That is why markets are worried in Europe, right? Europe is bad. That bad that this has been halted. That chart on the screen has been halted. So that tells you a story. Where we're going next? Well, when we look at the grand scheme of things, it's bears in control. Panic is setting in, and we have earnings season in the next 3 to 4 weeks in the US. If some big companies have some poor records and earnings coming out, we're going to see some lows in, as I've said it before, the S&P and stuff like that. This will probably break down lower if they are bad. If they're good, it may hold off for a little bit. So we've got to be careful. So, bearish, I know, but I'd rather you keep your capital and just wait a little bit to see what's going to happen, because I think there's still too many unknowns. I still think, my personal belief, we need a few more ticks in the boxes to see if we are okay. Some things look great to buy. Some things genuinely do look good to buy. But sometimes you may think, you know what, I'll buy it, but I won't buy as much. I'll just wait a little bit longer just in case. Because if this is a crap winter, boys and girls, it's going to suck. Simple as that. But anyways, if you got this far in the video, if you want to learn more, check out the links below to my Patreon. I do a journal, and ultimately also learning crypto for education. I do have a video essentially here which will tell you 3 things I wish I knew before I started investing. They're pretty good actually.